Chernobyl now. We have been told it has been taken by Russian forces. Russian troops reportedly taken full control of the area around Chernobyl's nuclear power station, including the plant itself. That's according to Ukraine's prime minister. The attacks on Ukraine has clearly rattled global markets as well, sending stocks tumbling, causing oil prices to jump even further. ABC's Elizabeth Schulze has been looking into the economic impact of all of this. She joins us now with more. Elizabeth, just taking a look at the big board there. Let's talk about the market's reaction to these attacks overnight.
Well, Kira, if you want to take a look at your 401k, today is probably not the day to do it. A lot of uncertainty in the market right now. And you can see the Dow is down almost 700 points. That's about 2%. Right now, that is the session low. Really, the question here for traders is how much further is this going to escalate and how long will it last? The stock market does not like uncertainty. And one of the biggest gauges of uncertainty, the VIX is surging right now, showing just how much traders don't really know what's going to happen. That means trading is going to be choppy and we will see a lot of ups and downs. The big move we've seen is in the price of oil. Crude oil prices now close to $100 a barrel. That translates into higher prices at the pump. And then the other trend that we're seeing is that investors are saying because of the uncertainty, they might go into some what are called safe haven assets, things like bonds or gold that are traditionally seen as a better, safer place to store your money in times that can be volatile like this, Kira.
And just looking at the video here, it is so hard to comprehend. We're paying up to $6 a gallon for gas right now. And, you know, the S&P has already had a brutal start to the year. We've talked about this together, Elizabeth, over the past couple of days. What do you think is expected ahead? I mean, what do we need to plan for?
A lot of the answer to that, Kira, depends on what the policy response is, both from the U.S. and its allies and also from Russia. So how much the action that we're seeing on the military front is going to trickle into a policy response that could come down to American households, especially as we are expected to see these more severe sanctions announced now any minute from President Biden. There is a risk that Russia could retaliate with its own actions, for example, by taking more oil out of the market. That would be a pretty severe scenario. And, you know, I've been talking to traders who say if the U.S. takes steps, for example, like removing Russia from SWIFT, the international payment system, that's a move that's seen as an escalation on the economic front, and that will have effects that will trickle down in the market beyond just your 401k because of what we could see, this sort of tit for tat when it comes to sanctions that could go all the way down then to your own account.
And as you and I were listening to President Biden yesterday, and when he announced the U.S. will sanction the firm that built the Nord Stream 2 pipeline, that firm's parent company is the Russian gas company Gazprom. What type of economic impact is it expected to have on the already surging oil and gas prices? What do you see?
Absolutely. This Nord Stream 2 pipeline, this $11 billion project that was intended to ship gas from Russia to Germany, it was never operational. Really, these steps that were announced are a way to keep the tap off, to not get the gas flowing from there. But it does show that the U.S. and Europe are willing to take really strong actions, even when it comes to restricting potential supply. And if we see more sanctions on energy supply from the U.S. and NATO, that would be a bad sign for gas prices. Already, like we said, $100 a barrel. A lot of analysts are saying you can expect gas prices to reach that $4 a gallon level. We're currently up about 20 cents just in the past month, and that level will go higher as we see the price of crude oil go higher. The other really important factor there is natural gas, which factors into heating bills. European consumers will be hit especially hard by this. They get about a third of their natural gas from Russia, and if Russia does decide to cut off some of that supply, their already very high heating bills are going to go up even more.
So what steps is the Biden administration doing right now to try to eliminate the pain we are all feeling at the pump?
We are hearing so much from the White House that as they are prepared to announce these severe consequences, they're saying we're also trying to take steps to alleviate some of the pressure on the American consumer. You know, the Biden administration is aware, as much as we all are, that inflation is already a major problem here in the U.S. economy. We've seen prices rising at the fastest pace in 4 decades, and there is a very real concern that some of these sanctions could then exacerbate that existing inflation even more. And that's something that isn't good for Americans' pocketbooks. It's not good for the overall economy, and it's not good politically either. So really, one of the steps they're trying to say from the Biden administration is they're working with other countries, major oil producers, to try to beef up supply, kind of shore up the reserves so that if Russia does pull back, they have an extra kind of stock ready to go so there wouldn't be as much disruption in the global market. Another step that they're trying to take is say that the U.S. might release some of its own oil from its own strategic petroleum reserve. That's something the Biden administration did last year. I will say that had a pretty limited effect on the gas price that we're seeing right now. And that the reality there, Kara, is that this is a global market. When there are big shocks and disruptions like this, it is, you feel the pain all the way across the market. And that ultimately does come down to drivers when they're going to fill up the tank across the world and including here in the U.S.
So taking all of that, putting it together, let's talk about the impact of the sanctions that have been announced so far by the U.S., EU, and other countries. How far could this go?
The sanctions that have been announced so far are pretty limited as far as the economic impact on Americans. Sure, we are seeing these drops in the stock market. That affects your mutual fund, your 401k. We're seeing higher prices at the pump. If there is an escalation, for example, by removing Russia from SWIFT, the international payment system, or imposing some of those export controls, which would limit Russia's ability to get access to critical technologies, traders and investors I've been talking to say that would show that there would be kind of a broader global economic impact. A lot of it depends on how Russia itself responds, how China might respond. If China kind of weighs in and takes Russia's side, that would signal even further escalation and potential consequences for the global economy. So, there's a really fine line to walk here, and imposing these costs that the White House, that the allies say will cripple the Russian economy, while also not trying to do so much damage to their own consumers who are already feeling the pain of higher prices really across the board, Kira.
Elizabeth Schulze, I know you'll be with me throughout the afternoon as we follow this ongoing crisis with Russia and Ukraine. Elizabeth, thank you so much.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.